and welcome to Daily Finance Wrap, your daily dose of everything to do with personal finances, whether it is to do with investing, insurance, taxation, or anything else. We get you a sense of all that's important when it comes to the world of money. Furthermore, we'll also be talking about trending topics, what's trending on the news front, and we get your viewer questions and queries answered as well. So write them into us by commenting on that YouTube channel box that you see besides the screen. Well, first up, of course, as you know, as our daily viewers know, we kickstart the show by sharing with you what the top stories are, and that's what we will begin the show with. So first up, we have Paytm in the news as retail investors, small retail investors, and a lot of foreign portfolio investors as well have reduced their stake in 197 Communications. 197 Communications, remember, is the parent company of Paytm. Now, this stake reduction has happened during the September quarter. So that's between June and September. So to what extent have retail investors, that's people like you and me, decreased or reduced their stake? Well, it's from 14.28% to 13.19%. And foreign portfolio investors have trimmed their stake from 58.24% to 55.5%. So that's almost a 2.5% cut. Remember, there was that entire fiasco around the payments bank license being revoked by the Reserve Bank of India, which did cause a flurry of investors to perhaps hit the sell button on Paytm. But nevertheless, we have seen, share prices of the stock still go up from those lows. That's the story on Paytm. Next up, and talking of fund flows, we have GQG Partners and its promoter group entities that have significantly upped their stake in the Adani Group companies during the September quarter. The combined investment is said to be at close to around 19,000 crore rupees. This as per the shareholding data. So the promoter entities have pumped in around 12,780 crore rupees in the group companies, and GQG Partners has invested around 6,500 crores. Now, Adani Group's promoters have essentially raised their stakes in primarily four entities. There's Adani Energy Solutions, Adani Enterprises, Adani Green Energy, and Adani Power. They've reduced their stake a little bit though in Ambuja Cements. And now we also have, of course, GQG Partners that's up their stake. It now holds a 4.7% stake in Adani Energy Solutions, up from 3.4%. They've also increased it in Adani Green Energy. And the stake in Ambuja Cement has also been increased. So that's the flows coming into the behemoth, into the Adani Group. Results season then, and of course, we have a slew of earnings that have been slowly been released. That's for the second quarter, that's the June to September quarter. One of them today, and after TCS, it's now HCL Tech, which has released their second quarter numbers. And net profit has increased by 11% on a year-on-year basis, beating street expectations. The revenue figure has come in at 28,862 crore rupees, which is an 8% rise. But on a quarter-on-quarter basis, there was a 0.5% decline in its profits, while revenue grew by 3%. EBIT margins up to 18.6%. That's earnings before interest and tax. Now, the MD and CEO of HCL Tech said that they have a strong pipeline, including data and AI, digital engineering, SAP migration, and efficiency-led programs. So that's HCL Tech for you. That remember that TCS had missed street expectations by a tad, but comparatively, HCL Tech has done a bit better than expectations. So there is perhaps a possibility of the street giving the stock a thumbs up when trade opens tomorrow. In other important news then, inflation numbers, wholesale price inflation numbers are out, and there was a slight rise in the month of September compared to August, 1.84% versus 1.31%. And it is food that has actually seen the most increase in prices. Food price inflation increased to 11.5%. That's quite large. But it's essentially interesting to note that factory fuel and power contracted in the month of September. Now, when it comes to the food basket, this is very critical because this is a basket that, of course, affects and impacts everybody, right from the richest to the poorest. We've seen a significant rise in the costs of onions, vegetables, basically the vegetable basket, and primarily onions and potatoes. So that's, of course, the WPI numbers for you. Well, not the best thing really, but remember, these inflation numbers matter from the point of view of how things increase and decrease for us, but also on in terms of what action the Reserve Bank of India will take. Moving on, the Hyundai Motor India IPO opens tomorrow. It will be open for public subscription from tomorrow. That's the 15th of October. It's fixed a price band, remember, of 1,865 to 1,965 rupees for its massive 27,870 crore IPO, which will surpass LIC's IPO of around 21,000 crore rupees. This makes Hyundai Motor India the biggest IPO in India. While, of course, one has to wait and watch to see how the subscription numbers pan out. Data shows that some of the biggest IPOs of the country, like Paytm, Reliance Power, along with government-owned entities, did see the investors make a few losses. But then there have been a few success stories as well, right? Like shares of Coal India, the more recent names being Zomato, which are, of course, currently trading above their issue prices. So this is a big one, Hyundai Motor India's IPO opening tomorrow. Okay, without any further ado, then let's kickstart the show by bringing on board our expert for today. We are joined by Anshuman Mishra, the founder of loanadda.com. The topic that we want to discuss is essentially interest rates. It's something that impacts all of us. It impacts our EMI bills, it impacts how much we'll earn from our fixed deposits as well. And now the RBI, of course, has kept interest rates unchanged. So this means our banks and financial institutions as well going to keep their interest rates unchanged. Does that mean your next EMI bill will also remain the same with no relief? Let's discuss all of this with Anshuman Mishra. And of course, don't forget, if you have any questions or queries you'd like to get Anshuman, to answer, put them in the comment box over there. Hi, Anshuman, and thank you so much for joining us today on Daily Finance Wrap. To start with, just your overall take, RBI has held interest rates steady. What do you think are the reasons behind that? What are the implications?
See, there are two things, Bhavina. One is what are the reasons? Now, the reason is obvious. The wholesale price index, inflation going up by a little bit here and there. They become a bit dovish. So that's the reason. So we are clearly seeing that these inflation-linked results by RBI. Now, the implications on one side is that, see, in the last couple of years, the way the rates have, fluctuated up and down. Sometimes RBI has, reduced it, sometimes not. Now, what has happened particularly because of that is that the question is that the implication of RBI rates is with the bank, whether the bank gives you the benefit of these rate cuts, or let's say if sometimes the rate cut has happened, then what does the banks do? So RBI has changed the rates quite a few in the last 2 years. Now, what you see, so there are two kinds of things. One is called a MCLR, which is the marginal cost of lending rate, or the internal benchmark adjusted rate which a bank has on which they price their loans. The second, which RBI has, they have recently started, which is called a repo linked rate. So if the repo changes, then the bank has to change it accordingly. Earlier, that was not the case. Okay, so earlier you could just get away, the banks could get away, the NBFCs could get away. If the RBI has reduced, they will not reduce by that much. If they have increased, they will increase much more than that and more frequently. So the implications we see that are very different to different people. Yes, the rates will remain stable, but if RBI, notwithstanding, many times RBI has reduced the rates, the banks have not. So if they've kept it simple, it is a demand supply. If a bank wants a set of customers, let's say a Bajaj housing IPO has come, okay? So the market has seen them as coming out very, very competitively. The huge 1.5 lakh crore of market cap. So obviously, irrespective of RBI does, if somebody is an ICICI and can shift to Bajaj, if Bajaj is giving a lower rate than what ICICI is, then RBI rates has nothing to do with it. So you can, figure that out yourself. Yes.
Got it. Okay. All right. So it's purely just also scouring the market and seeing what's good out there. And for now, of course, purely from a customer perspective, maybe just wait it out. If you're really not being able to find a better deal out there in the market than what your current banker or financial institution is offering you. What about its impact on depositors, Anshuman? I mean, almost all of us have at least one fixed deposit. And I guess we've been happy, right? Ever since post-COVID, RBI increased rates, banks were passing on those higher rates to some extent to depositors. But do you think the way that they were passing it on to depositors was much slower, perhaps?
See, now with the depositor, coming into the picture, see what RBI is now saying, or what we are seeing in the last 6 months, is that the huge amount of money from these banks' unsecured personal loans is going into the stock market. People are borrowing left, right, and center a huge sum. Somebody with whatever salary, they are borrowing money from the bank to put in the IPOs. That's where the retail market has gone up. So people are seeing that as compared to gold or real estate, because the stock market has become so buoyant, or let's say there's so many of these small SME IPOs have come, or larger new IPOs, like tomorrow Hyundai is coming. So the mop up is happening, is much more stable now, because most of it is happening due to the retail people who are investing in India. More than the FII, the retail is very, very fixed. That's where the decoupling from the global markets has happened. Yes, RBI is particularly talking to all the banks, especially there's something apart from this home loan. So the repo rate is linked to the home loans. Okay, if the repo rate changes, the bank changes it. Then RBI changes it. Then the banks may give it up or down. But RBI has other problems. The problem today is that people are borrowing money from the bank, not as a home loan, of course, as a unsecured loan, and putting in stock market. Obviously, it's the wrong thing to do. But if you see globally, if you see the US market or anywhere, like say 20, 30 years back, they had that kind of huge what do you call spending capacity or less saving. India used to be a saving country. Millennials or people today are not seeing that, and even somebody who's 40-year-old, he's seeing, apart from my salary, what do I do? Everybody's going to the IPO. And yes, I will give credit to SEBI to an extent, because see, the number of SME IPOs which are coming, if you see the last 12 months, the IPOs significantly have stayed above 77% growth in terms of their opening listing price for all the SME IPOs is a spectacular thing. So SEBI has done a great job in making this mutual funds or individuals investing in the stock market a safer thing. But RBI has a problem, because you can't use banks or NBFCs which are lending. They cannot give it for speculation. The impact on the depositor, which happens, that is today the rates are same. If RBI had reduced it, the depositor would be having some problem. Today the depositor has no problem, but the overall banks today, let's say an HDFC, they have something like a CASA, current account, saving account target. Everybody wants free money. So let's say you have a current account, you don't have to pay any interest. You have a savings account, you have to pay 3.5% or maximum 4% rate of interest, unless you move to the IDFCs of the world, which give you as high as 7. But otherwise, many times if you see the FD rate of an SBI is comparable to the savings account rate of an IDFC. So a borrower, a depositor should also, see, caveat and let the buyer beware that why can't you see that for a depositor also, like the fixed, the loan rates are not fixed, the deposit rates are not fixed. So I will request all the depositors who have FDs or deposits, whatever be the tenure, whether it's for 15 days or for 5 years, please do your window shopping and see. Especially just have a look at IDFC First Bank. They're merging with IDFC to IDFC First, and they're also giving one of the highest deposit rates. So if you are having a lower deposit rates from a cooperative bank, from a state bank, from even from a HDFC, you can go to a company and bank like that.
Okay, understood. And I think, you've mentioned a very interesting point, that today your millennial investors or Gen Z investors, when they get their salary, they want to put it in stocks, and those SME subscription numbers are through the roof, 300 times, 400 times. Of course, the offering is also smaller, but the fact that retail investors want to lap that up instead of parking the money in a fixed deposit is quite telling, honestly. Okay, but I wish we could convert this into an investing show and stock market show, but we want to keep it to loans, because a lot of viewers have this question that even if, let's say, RBI does cut interest rates, maybe in December, that's what now economists are saying. Even if they, let's say, cut interest rates in December, how soon, in your experience, especially during COVID, right, when there was this whole bout of rate cuts by the RBI, how soon have banks actually passed these cuts on to the customer? So hypothetically, let's say it was cut by 0.25% in September. Would I, in my October EMI bill, have seen that my interest rate has also gone down by a 0.25%?
Yeah, so Indian regulation, so RBI has not done a very good job in terms of the transmission of these rate cuts. Okay, horrible job. So if you see these banks and NBFCs, whenever RBI has reduced, we'll just make a chart, it will trail it by a big margin. Now, what banks or NBFCs or housing finance companies say is that our cost of fund is one thing, but our overall administration cost or cost of acquisition has gone up. So let me assure you. So firstly, do not wait from October to, let's say, December, when the next RBI rate cut possibility happens. Let's say during that time there is some wholesale price index. There's some election in some state. 0.5% goes up. So anyway, they will not reduce it. First, do your shopping. So let's say the home loan rates are between 8.4 to 8.8. Okay. Most of the customers, I mean, like 75 to 80% of the customers are paying at least 1% higher than the benchmark. Now, I'll give an example. You go to Tata Housing, you go to ICICI. Okay. If a new customer is getting it at 8.6, 8.7, the existing guys who have been there earlier getting it at 9.4 to 9.5, at least 70, 80 basis points, which is a huge difference. Suppose you're paying a lakh of EMI, that translates into a huge amount. So don't wait for RBI to cut. Don't think that RBI has not cut anything, so your bank is not obligated. Just apply for a balance transfer. Once you apply, there's something called a list of documents and a foreclosure statement. You just ask it to your existing bank or NBFC. 90 to 95% chance, the advantage of seeing Movina's show will be that the bank will reduce your home loan rate of interest. Okay. So first, and especially for the SME borrowers, the RBI has just recently come out with something. SME borrowers, whenever they have taken any loans, they used to have a foreclosure cost. Now that has been removed recently. So that, combined with your ability to see that, okay, if you just go to an ICICI site or HDFC or a Tata site, they will show you that if you're a fresh customer, you get a loan for 8.7, 8.8. But your loan, if it is going on at 9.4, immediately ask them for a list of documents and a foreclosure. Then you go to the next bank. Nothing. You just have to come to a website. Let's say you come to a Loanada site, or you just go to any bank or any sites that are there, and you apply to another bank. Say from ICICI to HDFC to Tata. Now, if you go swap and come back, to the millennials, I will explain to them in the form of a job. Now, let's say you're in Bangalore, you have a colleague. You go to one or two companies and you come back as the boss of your colleague. So similarly, if you sit and wait for RBI, it's not going to happen, because see, RBI, as I told you, in the last 2 years has done a very bad job in terms of the transmission. Whatever RBI has reduced has not gone down to the customer. That too, not to all the customers. So as I said, I am the borrower, I am a customer. My rate is, let's say, 9.4 in my home loan. The ICICI is giving 8.7, ICICI is giving me 9.4. I will just have to go to some other new age housing finance company. Let's say, Bajaj is one. They will reduce your, cost of funds. Let's say you apply to Loanada. We guarantee you that, if you're not getting the lowest, and you will never be getting the lowest. When the rates go up, they will increase. But when the rates go down, your question is that, let's say RBI reduce it by December, will my January EMI, reduce? No. What happens then is that the banks ask you, do you want to, reduce as per the rate, and you have to give them balance charge. Okay. When it increases, they will increase it directly. So you need to understand that we have seen this, segment for so long. It's regulated, yes, it's over regulated in some parts, like RBI has seen this economic side of it. But when RBI, when you're seeing, see the way that an RBI has to see that today everybody is facing these frauds, online fraud. Somebody's doing a Jamtara kind of fraud. Your money, your frozen account is frozen, you're stuck. Now all of that is RBI's work. They have to coordinate with all the police, the cyber crimes everywhere, and ensure that that's not happening. So when they're not doing that, you are on your own. You have to understand that for a borrowing, your loan, home loan, whatever it is, just do the shopping. Don't see this show and hear that RBI has kept it stable. So your banker is saying you just go to swap. You go to the neighboring bank, neighboring housing finance company. They will reduce your existing bank will reduce it by 10, 20, 30 paisa. So I think that my advice to all the people will be, just see what's your, what is the lending rate or what's the borrowing rate right now. Forget the jargon of whether it's an MCLR or it's an RBI linked. You just put your foot down and you just become like a bull, not understanding or not wanting to know anything. Yeah, mera rate to kam kar do, varna main BT kar dunga. If you do this, you will be shifted, because see, your rate of interest has nothing to do with your CIBIL, your track record. It has only to do with your swapping. So please swap. So I think the best thing is that you should just swap it.
You gave a very interesting analogy as well, Anshuman, by saying that how when you're switching jobs, you suddenly become, the boss of your boss in your previous employment. So I think you gave a great, example that way. So simple tip to everybody: if you are with bank A, just swap to bank B, because they are giving you that lower interest rate. And the probability is that if you tell bank B that, hey, listen, I'm getting 9% from this bank, what's the best you can give me? In order to get business, there's a high chance that they will give you a much more attractive interest rate. So that's a simple tip coming in from Anshuman. Still, if let's say there is somebody who is new to the loan market, they want to come in, they're going to approach a bank or any financial institution for a loan, they might be thrown those jargons that you mentioned, EBLR and MCLR, repo linked, fixed, etc. So according to you right now, which one would be the best one to opt for, assuming that we are in an environment where interest rates will go down from here, from the RBI?
The simple thing, there is something called RBI linked repo rate lending rate. RBI repo rate linked interest rate is the one you should take. Just memorize it. RBI linked repo rate. There is another thing, which is the bank's MCLR, they call it, marginal cost of lending rate. That is an internal benchmark rate. In that also it will go up and down with that. That's what they claim. But there is a law. So if RBI reduces by 25%, if you are linked to RBI linked repo rate cost of borrowing with the bank, it will go down. So this is the first answer to all the customers. One. Second, now when you're new, the bank, especially when you're stuck with some, home loan, to move somewhere, they will say, the new ones will have some, costs, so let's say processing fees or something. So the first thing is that, see, people like us, there's an entire cashback. See, Paytm started this cashback. You're buying sabji, you're getting cashback. You're buying. So, like, you remember we did that Diwali show wherein we were checking, what are the best offers for, the iPhone. So when you see the best offers and you do a little bit of, juggling, you see that, okay, हाँ यार ये loan अड्डा है, ये क्या बोल रहा है कि अभी home loan में मेरे को अगर 50 पैसा 1% charge, I'm taking a 1 crore loan, I have to pay 1 lakh and they are giving this cashback. Why can't I just go with them rather than going to the bank directly? Because, they will also do a balance transfer if the rate doesn't go up, and they will know us inside out. So today, the answer to understanding these loan options is that you have the right partner, just say, see, and it's all free. So we don't charge. We're not even charging. You're saying there is a processing fee. हम आपको दे देंगे कि ये जो discussion or adda of trying to understand people's questions. So we get these questions on a daily basis. So my mailbox or my Instagram is flooded by people asking these questions. And like you asked, and you are one of the experts in this segment, and you are also asking, भाई बैंक से क्या लेना चाहिए? अभी RBI linked repo rate वाला लो, क्योंकि वो तुम्हें MCR वाला चिपकाएंगे, that the sales guy will what they do with you never get to know. But yes, there is an additional option that if you partner with somebody, whatever be the cost, let's say the legal cost, there's a CERSAI cost, there's a application processing fee, okay, there is a mandatory insurance. So let's say whatever of this is coming back as a free cash flow to you, as a cashback. So you should do the shopping. This shopping or understanding who does that or finding out who does that. You should pick up your phone and do it. Yes, a home today is very very necessary as compared to a lot of people saying ये 3-3-30 rule है, ये एक आशियाना, ये एक घर तो होना चाहिए, and your dwelling unit, self occupied residential property you should have, whether you are in Bombay, Delhi or anywhere. Everybody is buying left, right and center. Your first property, not as an investment. So in that, the answer to your question would be, nice, just reiterate, there is an RBI link repo rate which you should take. That's the jargon if you want to. But there is something called MCLR, marginal cost of lending, which you should not.
Okay, understood. I think you've summarized it very nicely for all of our viewers, and especially those people who will perhaps now be approaching lenders to consider a loan, whether for home or any other purpose. Okay, well, this is a show where we also answer viewer questions and queries. Let me remind our viewers that you can put in any question that you have on that comment box and we will get it answered right away. In fact, we've got quite a few of them already. We have one coming in from Harshvardhan Sharma. Now he says, I took a home loan in November 2020. Again, during COVID, so attractive interest rates. Unsurprisingly, he got it at 6.5%. And of course, today it's increased. It's now 9.25%. I keep getting phone calls from other home loan providers that they'll give me a better rate, around 8.75%. So his question is, should I switch? And he's also asking, is it a good idea to keep doing some prepayment, perhaps 10% of the loan amount on a regular basis? My father, who is a banker, says it's a good idea. But my mother-in-law, who's an accountant, says it's a bad idea. So let's take your opinion on both of these things, Anshuman. I know you gave us a gist of the first part of his answer already, but just for the benefit of Harshvardhan, specifically his query, and any other viewer as well.
See, first, Harsh question from 9.25, somebody is giving you at 8.75. The answer is yes. So answer to Harsh is obviously you should know. Why should you lose 50 paisa for that? Yes, people will give you below 8.75 also. There are 8.6, 8.5, 8.4 rates also going on. So do your complete shopping, number one. Number two, let's come to your mother-in-law's question. Mother-in-law says that there's a home loan. Okay, and why an accountant says is that, see, there are Section 80C benefits, and there, whatever the old regime, new regime, and there are Section 24 benefits, wherein you are getting the interest waived from your overall. So what happens that if you take a home loan, okay, and there is a joint account with your wife, the benefit, if the loan amount is that big and you're giving from a joint account, the benefit is taken by both, by husband and wife both, for the same home loan. So if that amount is that high and you're, so you should not lose those income tax benefits, number one. Okay. Now coming to his father's question, who's a banker, that yes, he should be prepaying some amount. Yes, it's obviously prepay. You should prepay a home loan. But let's say you see the whole gamut. A customer will have a home loan at 8. He has it at 9.25. Obviously, the bank has given him this MCLR and it has gone to 9.25. He should reduce it. Then he will have a car loan. Car loan will be, if he's having 9.5, he should be around 9.5 to 10.5 range will be his car loan. And then finally, he'll have an unsecured loan, which should be in the range of 11 to 13%. So it's common sense to repay those unsecured loans first before the home loan. So you can't have a 5, 10, 15 lakh home loan, unsecured loan going on at 11, 12, 13%, and you reduce this 9.25% loan. So the answer which he has to give to his dad is that, I have this, maybe I should repay this, or maybe I should repay this, car loan, and maybe this home loan should continue. So if you have no loans, especially if you have a consumer durable loan, or या this EMI card loan, ये तो पाप है, इसको तो पूरा बंद करो, या credit card को roll over करो तो बिल्कुल नहीं. So that you should not do. if you have a personal loan, remove it. And the home loan, see, home loan should be there. It's a lifelong, tax benefit which is, coming. Why to touch it will be the last thing. But yes, it's a criminal offense. It's a loss that you are not reducing the rate of interest from 9.5. That's quite high in today's day and age.
Understood. Okay. So yes, for the 8.75% option. Also, if you have any other loans, car loans and unsecured loans, first try to pay those off, because those also have a higher rate of interest, plus no tax benefits either. So those should be paid off first. Home loan can be last in the pecking order if you had to choose. Okay, we can take one more question. There we have somebody asking us, my banker offered me a home equity loan. Is it different from a regular home loan, and should I opt for it? Anshuman?
See, this home equity loan, what's happening is that they're calling it a drop line overdraft. Now, this is the best. I mean, let me explain what's a drop line home loan. So let's say you have a 1 crore of a loan. Okay, so if your savings bank account is linked, and you have, let's say, 5 lakh of a bonus or 5 lakh of money, so your loan amount interest is calculated on 95 lakhs, not on 1 crore. Let's say you just taken the fresh loan. So this home equity loan or this drop line overdraft home loan, especially given by, again, Bajaj, in terms of salaried people's unsecured loan and also for the home loan, I think this is by far the best product which is available. Because I'll give an example. So, Mumina, let's say you have taken a house in Bandra. Of course, 1 crore of a loan is very minuscule in that. But let's say that the loan on that is 1 crore, and let's say you're paying 1 lakh of EMI on that. Now, the fundamental problem with such issue is that now, if your bank account today has 15 lakhs in the account, okay, so your loan amount reduces by 15 lakhs, because they have something like ICICI had this concept of quantum optima, that you're already fixed. So that amount is reduced from your home loan. So if the bank or NBFC agrees to link your savings account money as reduced from your home loan and take that much of interest, then that becomes a very structured product for you, and your rate of interest for you is much, much lower. If somebody gives you at 9.575 also, it is cheaper than the 8.5% loan if this 15 lakhs is removed from that. So this home equity or a drop line loan should be the first preference, and you should find and figure out who gives that. So Bajaj is a good option, and we do a lot of business with Bajaj. And post after that, see, anybody who's gone to an IPO, they will want their numbers, right? So Bajaj, I think, is my go-to person to try out this kind of a drop line overdraft home loan.
Okay, makes sense. I love how you correlate, what the company is doing in their business side, and how customers can benefit from it. But I think that brings us to the end of the show, Anshuman. It's been insightful. It's been packed with very actionable tips that I hope our viewers will benefit from, take heed of, and perhaps then sit to do their homework on what's the next best step for them. Thank you so much, Anshuman, for joining us. All right. Well, that brings us to the end of this show of Daily Finance Wrap. Thank you so much for tuning in. Don't forget to send in your questions and queries. Keep commenting on this YouTube channel. And we will be back at 6 p.m. once again with another YouTube live session of Daily Finance Wrap.